So I am very, very pleased to welcome Nick, who is the CEO of Halify, which is transforming last mile logistics with its dynamic job optimization switchboard. I want to learn more about that. By aggregating jobs across multiple partners and optimizing fleet utilization, Halify maximizes driver efficiency while ensuring cost-effective, sustainable delivery solutions for retailers and brands. Nick's a serial entrepreneur. He started this company in 2018, building it from the ground up to over 130 people, raising $12 million from venture capital and private equity funds, and achieving profitability. He also works with businesses of all sizes, including Fortune 10 companies and local businesses, to help them achieve new insight, claim new opportunities, and sustainably grow. He is also an active angel investor, advisor, and mentor to tech startups in the New York tech community and across the world. Nick, thanks so much for joining us today. Yeah, greatly appreciate you taking time to be with us. And I think, I gave the quick overview of Halify, but I think to kick this off, why don't you tell us a little bit about the company?
Yeah, absolutely. Thank you, Rob. And thank you all for having me. It's really exciting to be here. So a little bit about Halify. So I think the blurb kind of was a good overview of what we do. But what you can think about, when you think about Halify, it's basically like it's a marketplace. It's a marketplace that aggregates all of this last mile delivery volume. Call it small packages, stuff that you order on Amazon, Temu, Shein, eBay, whatever. Basically, we get all of that volume together, and it gets put into very highly dense routes using the technology that we built from ground up. And then we match it on the other side of our marketplace to basically all the drivers and fleets that don't call themselves Uber, Lyft, DoorDash. And so those are what we like to call the forgotten folks, the small micro crowdsourced fleets, the Amazon DSPs, the even taxis, limos, guys that want to do work that isn't Uber or Lyft, but this is what it is, and they can do routes that fill their entire day. Now, the thing about Halify, what it was born out of, was actually to increase a driver's utilization. So there's a huge problem that you've probably seen taking an Uber ride or whatever. These guys are always multi-apping, right? They got the Uber, Lyft, and whatnot. And so what Halify is trying to do is solving that problem by creating a all-day route with fair pay that a driver can do to fill their entire day instead of being, honestly, 50% unutilized. So we went about that to create this marketplace to ultimately solve for this while creating a green footprint, or decreasing a carbon footprint, by combining, instead of Amazon just doing Amazon deliveries, Temu doing just Temu deliveries, with different drivers, combining it together to just have one person do that. So it's a multi-pronged approach to a very difficult problem.
Interesting, super interesting. It seems like you have like a real market opportunity with that, and obviously the investment community seems to feel that way as well, since you've been able to raise money. But I think what's always important to talk about is what was the inception of this idea? What was like sort of the first sketches on the napkin, so to speak, when you first came about starting this?
Yeah. So the big thing about when you start a business, what you start with and what you end with are usually almost never the same thing. So I was in my dorm room when I actually thought about this. I was actually driving for Uber, Lyft, DoorDash, Via, Juno, when those were around. And I was driving for all these companies to pay for tuition and also have some extra side cash. I was a med student here in the city. So as I was driving for these, I was figuring out, hey, I was still very unutilized because I was still multi-apping. Can there be a way to get these drivers to be more, or myself even, to be more, get more jobs, fill that downtime? So what we started with, it's completely unrelated to this, but the premise stayed the same, is we created an automated app switcher. You can download it on the App Store. You go online with this one app. It'll take you online with all your gig apps, and then you accept one on like Uber. It'll turn everything else off until you finish your job, and then turn everything else back on automatically when you finish your job with Uber. So it was very different from what we have today. But from there, as we continued to go onwards, we figured out that, hey, we're collecting a ton of data. And we figured out that, hey, even still with all these multi-apping capabilities and automated app switching, drivers are still 50% unutilized. It's crazy. So we said, hey, why don't we start sticking our own jobs in here? Let's source some rush delivery jobs, food delivery. And from there, when we started doing that, it was very difficult to really meet the right unit economics. Drivers wouldn't always take the jobs because it would not be good enough pay, or be too far out of the way, or they're waiting for an Uber ride. So we had to kind of incentivize it, and you know, when you kind of jump into the gig economy and you understand the economics of it, rush, same day type delivery, very expensive, very, very unprofitable. So Uber just made a profit last quarter. This is the first time, which is crazy. DoorDash, Lyft, they're still unprofitable. But so from there, we kind of re-architected and said, hey, what if we have some more time to aggregate volume to create a whole day route? So we actually switched over into next day, 2-day plus delivery, and that gave us time to get volume from all of these different delivery providers and e-commerce platforms. And so when we put that together, we could build a business or create routes that have profitable unit economics, allow for, you know, allow for... It is going to rain on Thursday, you know. It's but yeah, so profitable unit economics is what we transitioned to, and that's how we created the marketplace that it is today. But utilizing similar drivers, utilizing the same concept of keeping a driver, you know, occupied throughout the day.
Excellent. So I want to touch on a couple things you shared in that. You know, our students, you know, many of them are entrepreneurship majors or minors, and we, you know, work on developing an entrepreneurial mindset and going through the early stages of validating an idea. And so what was part of the process in validating this idea, even in its earliest form? You know, that's so important to differentiate between an idea and an opportunity. And it came from personal experience, so you had some validation there. But in terms of customer discovery, what was your process like?
Yeah, so I think the best businesses, just as an investor, it being on the VC and angel side of things, and also just kind of seeing businesses as they build. Some of the best businesses are built out of folks that are solving for problems that they've felt themselves. So that's, you know, that's a little bit of validation. But, you know, let's take me out of the picture. That, I remember the very beginning of trying to do this app switching thing, that was very difficult to get validation because we were literally canvassing JFK parking lots where these Uber drivers would basically wait and for their next trip. So we would go there and we would, you know, try to get these guys to sign up on the app, you know, get their feedback, start these beta testing programs to see what they thought of it. We went to the Fulci building in Long Island City where all the Uber drivers, Lyft, and all these different companies are there where they recruit drivers and have them sign up. You know, we would go there and we got a small little office. So we had right in front of the VIA, if you guys remember VIA in the city. Right in front of that VIA office, VIA was friends of ours, so we were able to kind of have drivers come to us and then them. And getting that validation in the beginning was basically that. It was kind of that grassroots campaigning to make sure that, hey, let's see what people think at the places where they sign up. And, you know, people actually really liked it. But it wasn't, the problem with that was that it wasn't venture scale. So until then it was completely bootstrapped. It wasn't venture scale yet, but as we continue to re-architect it and kind of become what it is today, the validation only really came, I'd say, over the last year when we started to see a lot of companies signing on, you know, retailers and e-commerce folks. So that validation wasn't really built until a couple years ago when we really started to see that big, you know, migration from their their older systems for delivery onto our system. But it was a lot of campaign, a lot of calls, a lot of focus groups. It was calls with customers to see what they like and what they don't like, and just constantly iterating from our learnings. That's the biggest thing.
You know, I think that's a really good lesson to take away. I mean, it's like when we go through the process in our classes, we have the idea, and then we do some market research, and then we do the customer discovery, and then we sort of move on to like operationalizing everything. But the customer discovery doesn't end when the product hits the market. It's an ongoing process, and it sort of never ends, right?
Yeah,
because you're constantly refining it. So it's just something to keep in mind. I think that's a really important point. I know I'm hanging on to a lot of the early stage stuff, so we'll get to the later stage stuff. But I think this is really important. And one of the things that I've tried to really incorporate in a lot of my classes is the importance of teaming and how that correlates with the success of a startup. So how did you build your founding team?
Yeah. All right. This is a really fun story. So, my co-founder, his name is James. It was just me in the beginning. When I incepted the idea, so what happened was I went out to NY Pitch Night in New York City. If you guys have heard of it, but NY Pitch Night, I went there. It's my first pitch competition ever. And my co-founder at the time was, he had started a legal tech startup prior to, jumping on board here. And while he was there, he was actually sponsoring that event. And so when I went there, I was actually first to come up on stage. I had this big presentation that I prepared. I ran through it a million times. I practiced it with my parents. I practiced it with my girlfriend at the time, who's my wife now, but I can't tell you how hard I practiced. I showed up, I got on stage, and it was a 10 slide presentation. I got through 5 slides. My message barely came through. A lot of ums, a lot of 1 second, hold on, a lot of those, and I completely bombed. So the funny thing though was that my co-founder kind of still understood what I was trying to tackle. He understood, hey, he's a cool guy, seems to be a little smart, but seems that the problem definitely exists. So he basically came on as an advisor initially, and we started to work together on this thing, and I mean, we had a great working relationship. We had a great time canvassing JFK airports, the JFK airport lots for Uber drivers, and the Fulci building, and just kind of driving around the city to understand that whole thing. And over time, you actually start to see the validation pick up. Customers start to sign on, and then he also, one thing that we shared was the ability to learn and iterate very quickly, constantly changing the product for any feedback that we got. And I think we really enjoyed that about one another, and we just kind of clicked on a very personal level. So he actually ended up joining me as my co-founder shortly thereafter. I stole him away from his own company, so that was something. I still joke about it, and from there we were able to hire the rest of our team. I mean, it was a road to hiring the team that we have today, but yeah, and today we have, of course, my management team. It's me, him, my chief business officer Sasha, who we've met through the industry a million times, and then one day, it just, the fates just kind of crossed, and she joined in as well, and Nathan, who kind of similarly came from the logistics world.
So that's a cool story, and with the this sort of relationship you built with your co-founder, was it, in terms of like your gut check on whether that was a good move, was it the fact that you two sort of resonated and you knew that you worked together well, or was it that your co-founder had some skills that sort of complemented yours, or was it kind of a sum of the parts?
I think that it was a compliment. We really helped strengthen our own strengths, and we also complemented each other really well. The stuff that I was really bad at, marketing, design, that stuff, you should have seen the first website I built. It looked like it came out of the 1970s. It was absolutely horrible. But this guy, James, he came in and actually redid the whole thing. Really had a different, he's a creative. He has an art background, but day trades and started a rocket fluid dynamics company out of college. So, he's got a crazy background. But yeah, we really complemented one another. And I think the biggest thing is that in startups, people can get really high on their own Kool-Aid. That's something I've seen a million times. And people drink their own Kool-Aid, and they get very caught up in their own worlds, and people don't take feedback very well. But one thing that I think James really helped me with was keeping it real, making sure that whatever feedback we got, we actually really called each other out to make sure that, hey, this is not good, this is good, and vice versa. And I think that kind of working relationship and we never took it personally. We always understood that, hey, we're trying to make each other better. That was invaluable. I haven't really found that with any person that I've worked with like that so closely. So,
yeah, I think that what you just talked about is like one of the most important components of a founding team. Is like you can have people that have the skills that complement your skills, but if you don't communicate in a way that works for each person, that's going to create unnecessary conflict.
Yeah.
So it's great that you were able to find somebody that you sort of like naturally were on the level with in terms of the way you could give and receive feedback.
Yeah.
Because it could really cause a lot of challenges, just misinterpreting the way that people say things.
100%. Yeah.
So no, that's fascinating. So you started building your team. Your idea obviously shifted. You started to gain some traction, and when you look at startups, there's sort of like this sort of startup phase, and then there's this operational phase, and then there's this growth phase. And so, how did you kind of navigate moving between those different phases? Because they're very different in the mindset of the team, right?
Yeah.
So can you talk a little bit about that process?
Yeah, absolutely. You've probably, if you watch a lot of startup videos or read a lot about folks that have started companies, very successful entrepreneurs. There are people that you will hire that can help you go from 0 to 10, and those same folks will not necessarily be the same people that can help you go from 10 to 100 or 100 to 1,000. And then there's some people that will always stay with you from 0 to 1,000. So the hardest part is navigating. Yes, the company will change, but the hardest part is always navigating the team and the team dynamics of that. It's all part of the journey. Now, I would say that everything is always a startup. We're still a startup. We're kind of in the growth equity phase of things, but I still consider ourselves a startup. I'd say until recently, Uber was a startup. But I think the biggest changes goes from the first is when you have an idea, getting your MVP out there, and that's one big thing, by the way. Like, whatever MVP you have, just get it to market. It's not going to be perfect. They'll never be perfect. And see what breaks and see what doesn't break. But that is kind of the first part. The second part is operationalizing it. Okay, now that you have something that people are starting to adopt to, and you find that product market fit, that's the operationalizing part of it, where you can start to scale the business. How do you take whatever you've built here? Some customers are using it, it's great. Some other people want to use it, and they're trying to come on. How do you build it so that it's easy for folks to jump on, use the product, and have, again, scale where you can bring on a lot of different folks, a lot of different customers. And then into the growth phase is now that you've kind of figured, this is the really hard part. When you find product market fit, that's one thing, but the hard part is the growth phase, because you need to figure out the right unit economics. The unit economics, or the business for growth, is always, if I put in $1, how will the business give me $2 or $3? If you can figure out that formula, that's when you're ready for the growth phase. And so that transition, that formula, whatever it is for that business, that's when you're in the growth phase. That's where you start to see lots of capital investment and whatnot, and they just replicate the thing over and over.
Interesting, yeah. So I want to pause for questions, but I did have one other question as we talk about navigating through these different phases of the business. Like, you started this on your own. You brought in a co-founder, and then the team starts to grow.
Yeah.
A lot of founders struggle with sort of relinquishing some of the control and responsibility to others in the team. Was that something you experienced? I hope that's not too personal, but is that something you experienced?
Great question.
And what was that process like of sort of having to put your trust in other people at a certain point?
Yeah, I think that's a really great question. Not personal at all, and or maybe it is, and I just think something of it otherwise. But it's initially for me with James, it wasn't hard at all. I was just like, I don't know, the way he made it his own baby kind of thing, and he took such good care of it, and he thought, he just stopped working on his own company, and he started working on this all the time, and this is like him cranking his gears. I saw it every single day, and it wasn't hard at all. Bringing on other parts of the management team and whatnot, or even other people in the company, it is difficult at times to try to get people to trust people to do it the right way. But and I think initially when you start, it can be a little difficult to relinquish that control. But eventually, I think the best way to help yourself relinquish control is by, okay, of course you train the person to do it, and honestly, like startups, you kind of jump into the fire. That's it. You just got to do it and see what happens. And if it doesn't work, at least you're there to catch it. And if it does work, you know you hired the right person. And I'm going to tell you, it's not going to work, and then it's going to work. So that's the best way I can really say it, because there's no real, you know, do this and it'll work kind of thing. It's you just have to jump in. It was difficult for me at the beginning, and I mean, some things are still difficult for me.
Sure.
And I still keep tight control over certain things, but I think I've gotten a lot better at it. But yeah,
it's definitely hard. But I think the way you've described that is very, you know, entrepreneurial. We think about analysis paralysis as being one of the banes of entrepreneurs. And when we think about getting our product in the market, we say, just let's get it in the market and see what happens.
Yeah.
You have to kind of keep that same mindset for like bringing on people to do something, because it might not work and you can fire them and then you find somebody else.
That's right.
Whereas instead, you know, you could spin your wheels, just, oh, this person might be right, but not. This person, actually I changed my mind, we're going back to the first person, and then you end up getting nowhere. So
Exactly.
I think that's a good way to sum it up. So I have a million more questions, but I want to pause if anybody has a question. Yep. Introduce yourself.
Hey Nick, my name's Hunter.
Hey, how are you?
I was wondering what the risk factor was like for you when you were first starting out, and how you overcame that risk.
Yeah, the risk factor for me was, you know, either doing medicine or not. So it was a bigger risk factor for me. But let me tell you, my background has always kind of been building things, creating, driving value. It's always been a passion of mine. So it all started actually even all the way back when I was a kid. My friends and I kind of tried to get my friends together, and I started this snow shoveling business to shovel my neighbors' driveways in the middle of snowstorms or in the winter, and make some cash for us. So that's where it all started, kind of thinking out the box. But going into high school was the next real opportunity. So you probably have heard of Model Congress, Model UN, that kind of thing. I tried out for those. I didn't get in. It was kind of a popularity contest back where I went to school, and I was like, you know what? Screw this. You know, if they're not going to let me in, that's fine. Let me kind of forge my own path. So I started JSA, Junior Statesman of America, at my school, and it turned out that it became actually the most popular club, and all the folks from Model UN and Model Congress ended up joining our club, and you know, that was me trying to creating value and trying to create a great experience for everybody, and kind of doing my own thing rather than what was put out for, you know, traditionally to do. Going into college, I started a nonprofit organization, and that has raised 13 or 15 million for the disenfranchised across the U.S., diabetes research, bone marrow transplant research, and a whole bunch of different things. And then from there, I actually, you know, when I was in med school, I, you know, ran a flea clinic. I was director of one of the free clinics. I started a biotech company. Unfortunately, that didn't work out. But I had this kind of cooking on the side while I was doing the biotech company. And I jumped into this full time. And I've always realized that, hey, I love building. I love driving value in society. I love creating something that affects people at large. And so I kind of was like, you know what, a lot of soul searching, but I was like, you know what, I don't think I want to do this, you know, doing medicine. I want to build this thing. And so entrepreneurially, and you kind of have to be ready for it, you just got to jump in with 2 feet, and that's it. What happens, happens, and you just push through. So yeah, that was the risk factors, and it was a big one, but I'm really glad I did it.
Hi, how are you? My name is Diamond, and my question to you is, like, what's the best piece of information, not information, but like advice that you have received that like helped you build a strong company?
The best piece of advice I've received is, it will never be perfect. Stop trying as much as you can, just get it to market. See what happens. That is the best piece of advice, because I was one of those people that was like, it's not ready. Let's continue trying to put some new features in. It's still not ready. Let's see what else we can do. It'll never be ready. And you know, I've seen that we have like a small startup in our, you know, in our company, kind of as we're rolling out a new product line, and I keep telling the guy who we hired to manage that, it's never going to be ready. Just get it to market. So, yeah, that's the number one thing I can say, is just see what happens. And if it breaks, it breaks. You learn something from that. And the thing is, don't be afraid of losing customers, because those customers will eventually come back once you've figured it out, because it's still small. So, yeah.
Thank you.
Hi, my name is Jared. My question for you is, since you still consider yourself a startup, and as you get into like that growth equity stage, what's your end goal? Because like, there's a lot of companies that, like, let's say you're starting up something small. It's like, oh, I want to be like the next Edible Arrangements. I want to be things like that. Like, what is your end goal? Where would you envision yourself in the next 10 years?
Yeah, I think the end goal, it changes from company to company, of course. You know, our end goal is to be one of the biggest delivery platforms in the United States. You know, we're the biggest here in the Northeast and the Mid-Atlantic, outside of the UPSs and of the world. But, you know, go across the United States. We have the capabilities to go abroad and international as well. We have the technology to support that, the relationships. But I think there's a lot of impact that we can do here. So where do I want to go? I think that's where, in terms of expansion. And then after that, it probably might end up in an acquisition. I don't think I'd go for an IPO. But I think a nice acquisition into a bigger company, seeing good change on a bigger company, that they can use our technologies to actually bring their stuff to the 21st century. That would be really cool to see.
That's great. And then my next question is, if we were to ask you what your value proposition is for your company, what would you say are the big 4 things?
Yeah, that's a really good question. I love that. Yeah, so value prop, that's like the one thing that, you know, VCs and investors will ask you, so what's your value prop? The value prop is technology, allowing customers to have a good or amazing Uber type of experience for delivery that isn't food or grocery or same day kind of stuff. So 1, that. 2 is price. We've created an asset-light infrastructure to allow for a very low cost margin for us and allow for companies like Amazon and whatnot to create or allow for them to have affordable delivery in the age of rising delivery costs and for so many other reasons. And 3 is for the driver. The driver creating a network of all these drivers where they can easily come on, share work, get work that fills their entire day for good pay. So those are the value props that we're trying to build on. And yeah.
Questions?
Thank you.
No, we'll keep going with your questions. I've got a million of them, so I'm going to try and
Yeah.
stifle
Yeah,
myself.
yeah.
Oh, we have another one?
Yeah.
Oh, God. That's quick.
All right, so my name is Brendan, and the question that I had in mind, if there was something you could change when you were starting up the business, what would it be? Or like, what's a piece of advice you would probably give back to your past self to work with your current knowledge?
Yeah, that's great question. I mean, there's of course the advice that I said earlier, which was just get it to market. Stop trying to figure it out or put something new into it. But let me say something else that's a little bit different. I would say that the hardest part is yet to come. You know, the easiest part is building your MVP. The easiest part is getting your thing to market and seeing what happens. The hardest part is later on as you continue to build your team. Figure out who is good at what faster and delegate better and faster. That's a really big thing that I definitely struggled with, and actually James really helped me get better at it. But delegating, figuring out people's strengths, that was a skill I had to kind of refine over time, and delegating to those strengths is that kind of advice. You know, pay attention rather than just hiring a good resume.
Awesome.
Thank you.
Jay, you got one too?
How you doing? I'm Jaden.
How are you?
I'm good. I just wanted to ask, I know you stated that you was an angel investor. I just wanted to know, when looking at companies to invest in, what are the main points of emphasis that you look at?
Yeah, absolutely. So the first is I like to look at the market that's being addressed. Whatever it is. Is it a big enough market? I like to do markets that are at least of a certain size. It should be a multi-billion-dollar market. Doesn't need to be a multi-trillion-dollar market. That's one. Two, I look at the founder. Who are they? What have they done? What's their background? I don't care if you went to an amazing school or if you didn't go to school. I don't care about that. What I care about is the ability, how does the founder think? How do they solve problems? And how are they in person? The kind of relationship, like, are they amenable? Can they sell? Can they, I look at the founder themselves. And the last thing I would take a look at is what is the competitive advantage? What is the value prop? And what is going to make them win over $1 billion business? For example, I just invested in this company called Nox. They're basically an AI play for energy on thermal pumps, and they make thermal pumps more efficient using a proprietary software, AI-based software. Their competitive advantage is, of course, we talked a lot about the founders. All those things kind of check off the box. The energy market is massive, so that checks that box. But when we talk about the value prop, what is their competitive advantage? The founder's dad is basically a very high-level executive at the largest energy company in Europe. One. Two, so that's a massive competitive advantage. Two, the founders are able to, they created a technology that doesn't exist. Even the biggest companies don't even know that this could be done, and it doesn't exist in the market. No matter, I've talked to all these different customers of theirs, and it was novel for them. So novelty is a massive competitive advantage as well. And they're an agile team. They're younger, they're agile, and they're constantly iterating. I think the ability to constantly iterate from your learnings and iterate quickly is key to the development and growth of any company. So yeah, those are the things I look for.
Good question. Do you want to answer his now, Tyler?
So I was just curious. So like everybody has a purpose behind their business. So I just wanted to know like I don't know the word. What do you want your legacy to be as an entrepreneur?
Oh man,
That's a heavy question.
that's a heavy question. I love it. I love it. That's a good question. I think my legacy as an entrepreneur. Gotta think about that one. I think what I would want to do is I want to be able to create value for the people that I work with, where they join the company that I started, or they're able to join something alongside me. They might not have the resources to do what they want to do in life because of whatever situation that they're in, but they're working with me, they gain the right skills, they gain the right backing, and they gain the right network to actually eventually build or do what they want to do in life. And I think my legacy is basically empowering and enabling those that I come in contact with or that I have personal working relations with to do whatever they actually dream to do. And I think there's nothing more powerful than that.
That's a good answer.
Thanks. So another question I had for you was, you spoke about, something that you spoke loosely about was your first pitch competition, your pitch.
Yeah.
So after that, what I would call, at least for me, I would think of it as a setback, where it's really hurting your mental.
Yeah.
How did you recover from that, and what steps did you take to become maybe a better presenter, or did you find somebody to be that spokesperson for you?
Yeah, it took a lot of practice to get better. From there, yeah, it is 100% mental, and I was like, oh damn, I really bombed that. Honestly, it was so bad that it was comical, so it was kind of hard not to laugh. But it made it easier after I saw, James kind of pick things up from what little slides I actually went through, and that made it easier. However, there were many other pitch points after that I didn't do so well at, and it took many years to actually build that skill. But I think it was having the right support, whether it was from James or family, friends, my girlfriend at the time was my wife now, as I mentioned, and just constantly iterating on that. And then my actually pitching to VCs, pitching to investors, seeing their reactions, and actually starting from a lot of no's to finally getting the yes. And then once I started to see that, and you got to pitch to hundreds of people to actually get your first yes. And when you start to see that actually switch, that's like a massive green flag and confidence booster. But it took some time to actually build that skill.
Thank you.
Just piggybacking off of that, when you're pitching to try and raise money, and you keep getting those no's, what keeps you motivated through all of that? Because that can be pretty demoralizing at times,
Yeah. So I remember for my seed round, I think I pitched 150 funds. Something ridiculous like that. It was like 150 or 140 funds. All it took was one yes. All you need is one yes, and then from there, everything kind of falls into place. And so it's ridiculous. You just gotta, and at the time I didn't know how to like build the right round dynamics. You need to create, there's so many things. It's like, you need to create the right FOMO. You need to, investors love FOMO. I don't know what it is. They're just like, you need just like, I need to be in on this. I don't need to do any more diligence. Please, here's the term sheet. It's really stupid. But, it's like the biggest thing. If you can build FOMO, you can build that, creating the right dynamics. But, getting the no's and getting through that was honestly just faith that eventually, that's one thing about being an entrepreneur is that you need to be bullheaded. And there's going to be a lot of brick walls, and putting your head through that brick wall is going to be important, and just kind of breaking through it as it continues through. There's no way to get through it. I mean, you can rely on your support from friends, family, your co-founders, your teammates, but the biggest support that you need to have is your own conviction in your own product and what you're building. That's it.
Amazing. So I'm going to change gears a little bit. I want to talk about some really pragmatic things. So, your business has a couple of moving parts. You need companies, you need drivers, you need how did you get customers early on?
Yeah.
And you need them on both sides of the equation, right? Exactly. Which is really challenging. So how did you make that work?
Yeah, the biggest thing to any business is building a network. Networking is, as a founder, or as basically in entrepreneurship with others in your industry or outside of your industry as well, is the biggest thing, because it's through the network that you're able to meet key players that come onto your business. So how did we get our first customers? It was part of the network that we were eventually, we were accepted into the Entrepreneurs Roundtable Accelerator, venture capital accelerator here in New York. And the network there was incredible. We're very lucky to be part of that, and the team there is amazing. But through that, we were able to have a bunch of folks that, mentors, folks that were able to say, hey, this is what you're doing wrong with your business, this is what you're doing right, and these would be perfect customers for you. So, and as we continued and met people along the way, friends of friends, or network of network, and as you branch out, you get the right introductions. So the first customers that we ever had on what we're doing today, we actually got it through one of our mentors, knew someone at Olo, and that was when we were doing food delivery, and Olo came on as a customer because it was part of the network.
Wow.
And then from there, people have heard about, we're working with Olo, then Mercado came on. Then from there, ATD, American Tire Distributors, and so on and so forth. And so people, once you start that, getting that network going, that's how you get your first customers. On the fleet side of things, being plugged into the right networks as well. We brought on the TLC Commissioner of New York onto our advisory board.
Wow.
We brought on some of the transportation regulators across the U.S. and CLDA, or some of these basically association members and presidents who connected us to the right fleets and drivers that are part of these organizations. And channel partners are basically the way we got that. So attacking the problem from a network standpoint is really important.
And so a couple things. One thing that's really interesting is if any of you have attended any of the other talks today, every single person has talked about the value of network. Your network is your net worth, right? That's something you want to have like written on the inside of your eyelids.
Yeah.
Build a network. But you know, when you're thinking about these two different directions, you had sort of the companies and then working with these fleets. Were you tackling those both simultaneously, or did you sort of solve problem A and then move on to problem B? What was sort of the order of operations in that?
Yeah. Problem A was getting the right company first, you know,
Okay.
the merchants to actually put in orders. That was the hard part. Getting fleets, these guys are always looking for work. You know, the types of individuals there are not necessarily as sophisticated as a, you know, a very high growth tech company that we want to have on our customer list and whatnot, and there's a lot more that goes into integration as that too. So due to the timelines on that, we focused on that first. Once we've gotten the first, you know, customer or two, then we went to kind of tackle the other side of the marketplace, and then eventually they kind of continued to build simultaneously.
Yeah. The reason I ask is because we have students that in our entrepreneurship classes that are coming up with great ideas, and
Yeah.
some of them serve two totally different customer segments that both need to be a part of the equation. It's sort of like this chicken and the egg problem. You need to build like the list of vendors in order to be appealing to consumers, but you need enough consumers for it to be appealing
Yeah.
to vendors, and so it's always curious to see how you,
Yeah.
you know, a business like yours would tackle that problem. So
I would say always go after the person or the thing that's going to give you money first. That's number one, and then number two, you can solve that. Once you have the money, you have the avenue to money. It's easy to get the people to give money to. So yeah,
that's a good simple solution to that chicken and the egg problem, right?
Yeah.
Is go to who's going to give you money.
yeah.
Oh, another question I have for you is, I know we spoke about kind of your customers. So let's say right now, if somebody were to want to apply to your business, let's say as a delivery driver, how would they do that? And let's say a new startup or a new company that wants to distribute their products using your company, how would they go about applying?
Yeah. So right now, let's just talk about the company side of things first. They would just go on the website via word of mouth, or they might honestly get a package from us. They can just look us up online. You can always submit inquiries on the website to say, hey, I want to work with you guys, and then our sales team would reach out. That's kind of part one. Otherwise, you might see us at trade shows. You might see us at different marketing campaigns or whatever. But on the driver side of things, if you're joining a fleet, a more established fleet in the U.S., we've deployed our technologies into every major transportation management system in the country. So you probably already have access to us to grab routes or work with us just through whatever you're using. Otherwise, you can always go onto the website if you want to come on as a sole proprietor. Come onto the website, say, hey, I want to drive for you guys or do this. You can always sign up that way, and we'll send you a link or something and go through the verification process. But yeah, those are the two ways that drivers can usually jump on.
Cool. Thank you.
Excellent.
Sorry, one last question.
Doesn't have to be your last.
Yeah. How do you stay on top of like industry trends and in your field of work? Like?
Yeah, people say read, this. I don't know. I think that's a bunch of BS. I think the biggest thing is, as you can tell, I'm pretty practical about things, and I used to not be that way until I've kind of been through it. But the best ways are talk to the right people. Talk to people that are studying the field. Talk to people that are living the field. And if you're conversing with them on a daily basis or every other day or a frequent basis, you'll know the industry. You don't need to read a bunch of articles. You'll feel it, and you'll know it just by talking to people. Not only that, when you talk to people, you build your network because they'll introduce you to folks that you should know or that you'd like to know. And you'll probably get ideas formulating in your head from what they're saying based on their opinions, combining with yours and all the other ones that you're putting together. So I would say talk to people.
So how do you know where to meet the right people to talk to, and how did you find networking groups, or did you just talk to anybody?
Talk to anybody. Yeah, talk to anybody. Go to conferences that are specific for the industry that you're in. You'll find conferences are a great place to meet like-minded folks, trying to solve problems, maybe different problems of the same industry. So that's probably one of the best ways to meet people. Second, or there's so many Discord groups or LinkedIn groups focusing on certain, industries. Reach out to them, DM them, see. A lot of people respond. I always respond. I would say the last is there's so many these tech communities, like NY Tech Alliance, right? If you're in the tech community, just go to those communities and you'll start to find folks that are solving problems with all sorts of things, but eventually you'll find someone working in the industry that you are, and they'll introduce you to someone, and so on and so forth.
And one last thing.
Yeah.
Sorry. So, like the times you felt like discouraged, like how do you keep going? Because at times I know, like sometimes if something doesn't go my way, like I'll just like completely like be like, okay, I'm done.
Yeah.
Or maybe go back to it like later on.
Yeah, I've been there. Felt like the company is over several times. Things don't. That's the part of being the entrepreneur. It's always the highs are really high and the lows are really low, and it's amazing raising a bunch of money. It sucks when you feel like everything's about to crash and burn, and it's going to continually be that way. What gets me through the crash and burn periods is really continuing to be having faith and reminding myself that, hey, we built a product, a lot of people are using it, or people are using it, being confident in what you built, and just being bullheaded. That's the most important thing. Just, you might be discouraged, but you have to compartmentalize, do what you need to do to blow off steam, but keep at it. That's the only thing somebody can do to discouragement will continue until you get the yes, and that's part of being an entrepreneur.
Just sparked another question in my head. Sorry.
Yeah.
So it's inevitable, I feel like, as an entrepreneur, where you run into, it's not necessarily a wall where things aren't going your way, but maybe a wall of productivity where it's just like you don't, even if you're doing well, it's kind of like, what do I need to spice it up and bring back, not most of the joy, but make it even more enjoyable.
Yeah.
If you ever hit that kind of wall in any of your startups that you spoke about, how did you break through that? Because I feel like there's a lot of, so in our class at least, we're making a product to sell while we're donating most of the profits to charity. And I feel like it's inevitable to run into that wall where it's like, we're doing well, but like, do we really, not that do we care, but it's like, do we really have to keep selling more? So if you ever ran into that wall, how did you run through it?
Yeah, in terms of productivity, I've definitely run into that wall before. Honestly, I just put it down, go play some basketball, hang out with some friends.
That's real.
Real.
That's real.
That's all I really need. Hang out with my co-founders. That's just that's it. Put it down for a few days. Put it down for a month even. I've done that, and I focus on other things. And then eventually, I'm just like, hey, this part really sucks. Still, I should try to fix it. I have all these new ideas. Let's get back at it. Put it down and come back to it. That's the best way to do it, because you'll find that inspiration again when you hit a problem that you were trying to fix before. That was you're trying to fix then. When you hit that, you'll kind of come back to it.
Yeah, I think there's a misconception, from the outward view of entrepreneurship that you just keep smashing your head against the table until the problem fixes itself, right?
Yeah.
And the reality is, especially for your question, is it's okay to step away from it and not think about it for a little bit and then come back refreshed with new perspective. I think that's more entrepreneurship students need to know that. I think it's really important. So, does anybody else have questions? I've got 100 of them, but I want to let you guys answer your questions.
Yeah.
Hey, so what would you say? How would you say that your company stands out from other ones that are also pretty much in the same field?
Yeah, so we stand out based on we're the only one that has a seamless end-to-end technology stack that connects the customer down to the driver in an open marketplace feel. So usually the methodology has always been there's so many different types of technologies that you need to actually make this work. You need a warehouse management system, transportation management system, open API, you need or EDI connectivity, you need routing platforms, you need driver management, payment tools, all that kind of stuff. Usually companies have gone out there and sourced one by one, each and every single technology. And you need to have them integrate together, and they don't do very well at it. And lots of data loss, terrible customer experiences, so on and so forth. We've created the first seamless end-to-end technology where there's no data loss because it's all in-house and there's constant status tracking and chain of custody kept. Second, asset light. You know, everybody's been very asset heavy. They hire all their drivers either by W-2ing them, 1099, you know, independent contractor type model with them. They buy a bunch of trucks or cars. They have a ton of warehouses. Very asset heavy, high cost structures. We've done it by using access capacity in existing infrastructure, using existing drivers out there, using existing warehouses, partnering with folks that have excess capacity in their warehouses to do what needs to be done. Our model is we need 7 warehouses to cover every single city in the United States, whereas the usual method is, and they're small warehouses, usual method is hundreds if not thousands of warehouses to cover the cities across the U.S., millions of square feet each. So that's how, and it's all an advent of our technology that we've built.
Kind of to like back off that question, when you first started off, like, I know you like said you went to airports and like talked to people, but like for the tech part, like how did you start off when you had like nothing? Like did you didn't start off with like 7 warehouses and stuff?
No. It's where we started was just with like an Android app, and it's very clunky. But where we eventually, that's the part that I kept saying, you need to continue to iterate off of your learnings very quickly. So we started with that Android app, then we figured out we need to transition into this. So we hired a developer to set up a back-end server infrastructure so that we can get orders, we can process them, keep data, you know, relevant and seamless. And then we started to build the technologies, the transportation management system. What has to go into that? You know, how do you manage drivers, payment architectures, all of that. And it took time. It took years to actually build those things kind of through and through. But we figured that out as we figured out what we were solving. There's a famous quote, or it's a famous saying amongst entrepreneurs, you know, in the beginning, you're basically trying to build the plane as you fly. So it's like, that's the beginning of any startup. So I would say you're gonna figure out stuff, what you start with is not gonna be what you end up with. So imagine what you start with is like this open shell and you're trying to fly this thing and you're in the middle of the air. You figure out, oh my God, I need an engine. Okay, so you build some engines. Okay, so this works now. Oh, I need wings. So you start to build the wings. So similarly, we started to build, we need a transportation management system. So we built that. And we figured out everything that needs to go into that by talking to the right people that have both built them and bring on the right advisors. We need a warehouse management system. Okay, we need that. You know, similarly, routing platform, so on and so forth. So we built those as we figured out we needed them. And that's basically being an entrepreneur, because it's crazy, but yeah.
My question to you is, for someone who have found their product market fit, what advice would you have to someone who is in that transitional phase from product market fit to that growth stage, and what advice could you give them?
Yeah, if you found product market fit, where you start to see customer adoption, and you see that what they're, I don't think so product market fit it's hard to define, because some people say you need at least 3 customers, some people say you need to have 100 customers. You know, I define product market fit by saying you need to have enough customers and enough validation from folks that you're trying to sell to that it makes sense. You might not have that it's a problem in the industry, they're looking for a solution, and your solution fixes that problem. And that is, of course, something that you can figure out, but as an investor, I would have to do my own research to figure that out. So there's that. The transition portion, to answer that, is once you've found product market fit, how do you scale? You know, it's great to have 3 customers. It's not investable. It's not venture scale. It's not something you're going to raise money for unless you can get those 3 customers to go to 100 customers or 1,000 customers quickly and easily. And when you figure that out, how do you get those customers? And how do you, that formula that I said, if I can put in $1 and your company can print out 3, what is that formula? So once you have that, that's your growth equity phase. Now, that's where you go out to investors, say I need several $1 million, this is the formula, I want to replicate it this way, so on and so forth, so give me your money. That's the growth equity phase, by solving for that specific formula.
Thank you.
Excellent.
So let's talk a little bit about the, just take a look at the time, because I know, all right, we have a couple minutes left. So let's talk a little bit about like your work in the mentorship space. 'Cause,
Yeah.
you know, anybody that's in the entrepreneurship space knows the value of mentorship. Mentorship is everything. So what are the types of startups that you've been mentoring in recent time? And I have a couple follow-up questions on that. So like, are you in a certain sector? What's your
Yeah, I
focus?
usually I like to mentor companies that have some kind of tech component to it. You know, technology focus. Whether it doesn't need to be a SaaS company, or it could be a marketplace. It could be a hardware, you know, a tech-enabled service, hardware-based tech, IoT, whatever. But some kind of tech component to it. Just because that's where I can offer most advice and most impact. That's what I look for. Yeah.
Excellent. So are you mostly mentoring early stage companies, or where are they sort of at in their growth?
Yeah, I mentor all the way from, you know, trying to figure out, you know, here's my product. I don't usually mentor before creation of product. They need to at least have an idea of what they're trying to solve. So, you know, or they already have an MVP. From there, I'll go all the way up to, you know, seed round, like they've raised a seed round, even a Series A. Yeah, after that, that's where I think I can put in most of my experience.
So, just for the sake of simplicity, let's focus on sort of like the pre-revenue to early revenue kind of startup. What are you seeing? Sort of like any kind of trends and the biggest challenges that they face? Is there any sort of like theme that you're seeing across the teams that you mentor?
Yeah, I think the biggest thing is not taking feedback very well. I think people in the entrepreneurship space can be a little stubborn. And if somebody says, hey, your product sucks, I'll never use it, you know, they blow a gasket. But why? Why does it not work? I think the most important thing is asking, why does it not work? What can I do to make it better? What needs to be in there so that you will want to use it and you won't say it sucks? Those are the questions that they need to be asking. And I like to tell, you know, my mentees, like, hey, ask those questions, don't get upset. Because chances are it will suck, you know, right out the gate, so.
Yeah, that's an important insight. You know, entrepreneurship is, you have to check your ego at the door. You know, you really need to. And funny enough, like having attended a lot of pitch competitions, you know, you always get those folks that are pitching that get real defensive when the panel starts asking questions, and you know nothing good is happening as a result of that, right?
Yeah.
So you have to check your ego. So that's awesome. And as you move into like going for angel or seed round, do you notice any other sort of challenges as they progress in their growth?
Yeah, I think as folks continue to progress their businesses, challenges are usually around building the right team. How do you hire the right person for a certain job? Chances are you're not. And the person that you hire might be great now also, but if you do hire the right person, might be great now, but they might not be later on. So being able to be iterative not only in your product and what you're building, but also on the people that you work with is really important. I would say the other is being discouraged with raising money. You know, folks are just like, I keep getting no's, and I feel like I'm just going to give up. It's pretty much done. But the only thing to raise money is to continue. It's really hitting your head against the table.
That's the only way.
That's the only way to do it. And you know, you probably heard these stories of companies that have raised hundreds of millions of dollars. I know I have friends of mine that have, and you know, they did not get yeses early on. They did not get yeses even in the middle, but they set up a process. And the most important thing to raising money is setting up a process and creating the right round dynamics so that people say yes faster.
Interesting. Just to go back to the teaming component, it's just interesting that like there's sort of this balancing act between hiring for your immediate needs and hiring for the future. And like you don't want to be so future focused that you're overlooking the needs that you have today to build something, right?
Yeah.
But you don't want to hire somebody that is going to be done in 6 months because you scaled beyond that. So that's like a really interesting insight of balancing that fine line between need and the future.
That's a really good insight, actually. That's I would say actually don't be afraid to even hire for 6 months.
Yeah.
Because you know you can always bring them on a contract basis or whatever.
Right.
But if you need somebody, you need somebody. And the worst thing that you can do is be afraid of hiring somebody because for whatever reason, bring them on. If it doesn't work, don't be afraid. Let them go. Yeah, but it is a fine line. It's a balance that even I still contend with today.
Sure, absolutely. So just for the sake of time, you started bringing up the funding part, and so, this is one of the questions you had sent over, but I love this question. What are some of the do's and don'ts in raising money?
Yeah, raising money is, so there's so many different types of capital that companies can raise. It could be bootstrapped, it could be angel, family and friends, it could be VC, it could be private equity, so on and so forth. Do's and don'ts. I would say do not be defensive. The moment I see defensive founders, I mean, yes, it's great that you're being passionate. Not everybody's Travis Kalanick. You can't be, that bullheaded and that ridiculous and get funded like crazy. But that doesn't happen anymore. So do not be defensive. Take criticism and try to take it in a good way. Be defensive in a respectful way, saying like no, and show data to your defense that you're trying to put ahead, and that's very respectable to VCs and investors. I would say do's, set up a process. The most important thing, as I keep saying, is you need to have many different funds. You set up it's like kind of like cohort analysis. You bring several funds through at a time so that you have different funds competing for your investing in your business, because you're trying to create FOMO. So that is a do. Do a process. Another don't is, well, it depends what phase you're in, but don't go in with, you need to know your financials and your numbers really well. And that is, a lot of folks don't really know that. And if you want to raise money later on, back to your question, you need to know that formula. What is your expansion repeatability formula? And if you don't have that answer, nobody's going to invest. And I would say another don't is don't be discouraged with no's. Yeah, all you need is one yes. I pitched 150 VCs my first round. I got one yes, and that changed everything. So that's all it takes. So yeah.
On the finances, knowing your finances, would you say then, like, having a really clear understanding of your unit economics is the most important financial metric to have, or is it a little bit more holistic than that?
I would say holistic, absolutely, but if you, venture capitalists, investors don't really care about profitability on the early stage. What they care about is, can you build a business that can build profitably? You might not be profitable now, but in 10 years or 5 years, if you have enough money to scale, can you get profitable? What is that road to profitability? And having a great understanding of your unit economics is that. And I couldn't agree with you more on that. That's super important on that, yeah.
Excellent. So we have a little more time, and I do want to open the floor for any additional questions. You've all asked amazing questions, but if anybody has any other questions, I want to give you the time. So we'll give everyone a minute here to, yes.
How did you deal with comparing yourself to others?
Good question.
Wow. Yeah, that's a hard one not to do. Yeah, I'll give you an example. So we went to ERA, some of our cohort, in the cohort that we were in, some of our companies that started actually, they didn't even have a product when we started, and these guys raised hundreds of millions of dollars. And it's hard to not compare. And honestly, it's, I think, a change in mindset. I think the change in mindset is, one, they're a great connection to have and a great friend to have, to learn from, and also as part of the network for introductions or whatever. So think of it that way. And seeing what they've done and try to replicate what you can do to match that. It's using it that way to learn from, get better, but also using it as a fuel to the fire. It's like, if they can do it, like, why can't I? I think it's a change in mindset rather than saying, these guys did it, I can't, why can't I, so on and so forth. That's only going to, it's really just that. And I think that just takes practice and time to change that mindset.
Well, I have 100 more, but we'll save that for another day. So first, let's give Nick a quick round.